Good morning, traders. It is the first trading day of the month. It is September 1st, Thursday. Let's take a quick look at my last pick. I am bearish today. I've been bearish since before the open. Obviously, the market is in a downtrend right now. I am short a futures position. Should be getting a couple fills in here. So we'll take a look at the last pick, which was DOW. That was a short that I put out 2 days ago. Oh, yeah. Working out very nicely. Upward sloping trend line, breach to the downside, below the major moving averages. Let's put those up so we've got those readily available. And you can see below the 50-day moving average, everything lining up for this short. Really, really nice trade. Let's take a look at a couple of others. Z was one that I highlighted about a week ago. Very, very choppy. It's finally starting to cook. You can see that upward sloping trend line breach to the downside. Market's very bearish, and we're going to get into that in just a second. I'll also tell you why I've got a target set on my S&P futures. Mainly, it's this 10p indicator right here. So let's see if we get filled. We may be getting a little bit of a bounce here. Overseas markets were very weak. We had the flash PM, or excuse me, the official PMIs that came out. Asia weak, China weak, Europe weak. So we've seen some overseas selling, and that is providing us with a stiff market headwind today, a tailwind if you're short. So that was one of the trades. LOW was one that we had to leg out of. This was a bullish put spread that we established leaning on that upward sloping trend line. When that was breached and we saw this long red engulfing candle and we had taken out our support, we had to leg out of the position. So we successfully legged out of that this week also. Apple was another short that I highlighted earlier in the week. You can see nice follow through. It was at the 200-day moving average. Now it's all the way down to the 50-day moving average. They've got some product releases next week, so that should lend a little bit of support to the stock, but it doesn't seem to be right now. It's just following the market. So let's take a look at what has me bearish this morning. Well, first of all, we just have to go to the daily chart and then we'll see everything that we need. We've got this upward sloping trend line, breach to the downside. Major moving averages have all been violated. Since that Fed speak last Friday in Jackson Hole, that was the catalyst. The Fed came out, shocked the market, quite honestly. They were not expecting to hear the Fed say, we're going to tighten no matter what. Economic conditions soften, they soften. It's just part of the price we have to pay to tame inflation. So we've got a jobs report that's coming out tomorrow. I think the jobs report's going to be pretty decent. Initial jobless claims the last 4 weeks have been very steady. So we've had decent job growth right now. Not a problem. However, the BLS, Bureau of Labor Statistics, does fill the report with seasonal adjustments. So who knows? Maybe it comes in weak. If it does, I do not feel that it's going to be a bad news is good news scenario. I think it's going to be bad news is bad news because even with a soft unemployment report or two or three, the Fed plans to keep tightening. They're also quantitative tightening. So they're rolling off their balance sheet right now. That is another form of tightening. It's very stealthy, but that is also going to weigh on economic activity. The Fed also said that they don't plan on easing in 2023. So the market should not expect any rate cuts. And that was part of what we saw in that statement last Friday. So we've got a lot of negative factors right now starting to build up. As I mentioned, economic growth in China is starting to slow. I feel that's one of the bigger problems that the market has to deal with right now. All you really have to look at is these stacked long red candles. And when you get them consecutively like this, you know that they are weighing on the market and that the selling pressure is extremely heavy. So we have to be slanted to the short side. You don't want to be out there trying to buy dips. Now, the only way that I start looking at a possible bounce in here is if we get a deep market sell-off. So this is not a particularly strong market decline right now. And I'm going to take gains on my futures position right now because I just feel like the market could be getting ready for a little bit of a bounce here. We are in pre-holiday mode, so lock it in. And I'm flat. This 1OP indicator is deadly. So I just had a small position on here. It was 1.5 contracts. Just wanted to kind of test the waters early this morning. Did a little trade in after hours session as well. Here's what I'm looking at right now is this 1OP indicator. And you can see how the move lower, lots of mixed candles, lots of overlap, green and red candles. You get this big red candle in here. Now you got a little bit of a bullish hammer. We're starting to bounce off of it. This indicator is predictive. It is not reactive. So it tells us when a move is coming up. Right now, I don't see a lot of trend strength. We can go back into the price action from Tuesday, and we're going to see a bunch of stacked red candles. That is very bearish price action. Not a lot of overlap. Long red candles closing on their low. This tells you that we're in for a bearish trend day. If you go back and watch that video, you'll see me say exactly that. In fact, I was shorting up in here, and in that video, I said, well, how can I have the confidence to short right here when we've seen this kind of nice bounce? Who's to say it's not going to continue to go higher? The clue is right there. That selling pressure is not going to go away. The clue is in the daily chart. So when I short here and I start to see resistance on this bounce, it tells me it's running out of steam and I've got a bearish 1OP cross right in there. And I have the belief that this low is going to be tested again after heavy, heavy selling like that. Context, super important. Sure enough, we did test that low, and I had a buy order in on that low because this bounce took much longer to unfold than I would like to see. Typically, if you get this type of heavy price action, this type of heavy selling, you want maybe a 20 to 30 minute bounce and then blam, right back at it, new low of the day. And you would like to see ideally a substantial new low versus a marginal new low. When I get this almost bullish engulfing candle and follow through, and I get a bounce that has this type of height, went all the way into the middle of this red candle, still preserve the open. This tells me there is support. And when I get short up here, I need to temper my expectations. I should not be expecting ka-chunk, ka-chunk, ka-chunk way down because this is telling me that buyers are relatively interested. So I exit here and then boom, bullish engulfing candle. When I saw this, I knew that the low of the day was in, and it was. And I made those statements as it happened as well. So learn to read price action. You don't need any indicators, but if you're going to use one, 1OP is fantastic, and I don't know how I would trade without it. So now we get this long candle in here. What do you do with that information, Pete? Well, first of all, we have retraced half of this long red candle in here. Okay, right now, this is probably just a solo candle. This is just a short covering rally. Well, what would prompt a candle like that? Well, lots of people coming in to short the open because they look at the daily chart and go, oh my gosh, so bearish, sell, 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 sell. Ooh, ooh, here we go, long red candle. Now I'm really going to get in. So they sell, we get this little bounce in here, and now they are in a position to be squeezed. This can continue for quite a while. You can see yesterday we had a choppy downward direction to the market, but lots of backfilling, lots of retracement, so not a particularly strong trend. We are in pre-holiday mode. There is a big economic release tomorrow, so I'm not looking for a lot of momentum either way. If I'm going to get momentum, it's going to be on the downside. This early price action tells me that I need to take profits along the way. So when I get these drops and I start seeing tails under body and I get a bullish 1OP cross, I should take profits. Gee, Pete, would you buy futures here? Because it's telling you that the market should bounce. No, I'm not going to buy futures here. I want the tailwind at my back, and right now that means short side. So I take a little reprieve, let the market rally, draw my upward sloping trend line, wait for a bearish 1OP cross. Yes, I can short in here. Okay, now we get this new low of the day right here, marginal new low, not a substantial new low, and we're starting to get another 1OP bullish cross in here. So I probably would take profits in here. Well, gee, Pete, you missed this part of the move. Yeah, so what? These are overlapping candles. This is a marginal new low. Take your gains. Pre-holiday trading, lighter than normal volume. You don't have to squeeze every nickel out of the trade. You just have to make sure you have winners. So you exit here and you see this type of formation and a breakdown of that upward sloping trend line. Well, this is a bear flag. You could short in there, but I don't think I would have because I'm already seeing some choppy price action. So in any event, that's the way that you need to look at charts. That's the way that you need to interpret price action. And hey, looky here, I've got a couple of stacked green candles. So let's talk a little bit about head fake rallies. When you get a strong downward movement, you will oftentimes see a long green candle like this. If that long green candle reverses instantly, like to give up half of it and then the next candle, the rest of it, or you get a bearish engulfing candle, whoa, that is a sign. Look out below. This was a head fake. This is just to shake out shorts, and we're going back down. When you get a couple of them stacked like this, that's fairly impressive. And you can see how accurate this 1OP indicator is. It told me, Pete, you're short. You should probably think about taking some gains in here. Okay. So now we get a little bit of a release. These are those early short sellers. So we're probably going to come up and we may try and get into this gap if on this bullish cycle, so 1OP up, 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 if we can't get into this gap, if we can't get through the high of the day, I'm going to be looking for more tails above body. And then I'll know that on that next bearish cross, we'll have a chance to sell off and perhaps even take out the low of the day. Right now, I'm just taking it one step at a time. Until we establish support, what might support look like? Support would look like a big drop and then a bunch of these, like 4 or 5 of them even, stacked on heavy volume. And we're not getting the heavy volume on this bounce either, so that makes me suspicious of it. But if I started to see 4 or 5 consecutive stacked green candles, one on top of the other on heavy volume, that would tell me that we have a short-term low that's been established. But until then, we're going to continue to drift lower. Next week, we have the ECB is expected to raise rates 75 basis points. Given all of our rate hikes in the US, no big deal, right? It's a big deal for Europe because they have not been tightening when we have been. They've been holding off as long as possible because their economy is already weak. So this is a big rate hike for them. I think that's going to keep pressure on stocks, especially as that ECB meeting starts to get closer and closer. September is traditionally a very weak month. The Fed is in recess. Washington, D.C. is in recess. No one is minding the shop. And that's when all these negative headlines start to surface. And that's what we're seeing right now. So let's go back into that daily chart, take one more look at it. You've got so many technical support levels that have been breached. My next major technical support level is at SPY 390. Click on this candle, click on this candle, upward sloping trend line. Ooh, we're getting close. And that also is a horizontal support level right in here. So you can see support, 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 support. Now it's resistance, resistance. Now it's support. That's a significant level. So I would expect to see a little bit of support in here in the next few days ahead of that ECB. Depending on their statement, we could see another ka-chunk down below this upward sloping trend line. If we breach that, things could get nasty again and we could see accelerated selling pressure. So let's take a look at some shorts that might work. I'm going to go into my scanner and I'm going to go right into my day trading searches and I'm going to go right into heavy selling. And NVIDIA is the first one on the list. That is a nasty chart. Upward sloping trend line, breach to the downside below the 50-day moving average, long red candle here. That was actually last Friday. Look at that follow through selling down through horizontal support. M5 chart. Yes, that is a nice drop. Let's go back into that 5-minute chart of the S&P because this is a pattern that you need to watch for. Look at that liftoff right there. What did the stock do? Nothing. Nothing. Usually stocks are going to follow what the market does. When they don't, and this one can't get off the deck, that means it has more downside. Look at that volume. We could put up the 1.0 volume indicator, and you can see very, very heavy volume today. So yeah, I think NVIDIA could be a good short. CRWD. Boom. That's your short of the day right there. I could tell you looking at the 5-minute chart, but I can also tell you that the D1 chart is bearish. Why? Look at that lift in the market. What did the stock do? Nothing. Nothing. Whap, 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 whap. Sellers don't care that the market had a little short covering bounce. Any bounce in this stock, and they are nailing it. Look at that beautiful upward sloping trend line. Let's draw it in. Let's see what we got here. Well, we can draw one like that. Break down there, break down below the 200-day, break down below the 100-day. You can also tighten this up and you can capture a couple of more points in here as well. So you got basically 4 touches along the way. That's a nice gradual sloping trend line. That means it's very valid. You can see how the futures right here are struggling to maintain these green candles, struggling at that resistance level. 1OP is spiking. I'd like to see him take another shot at it, another shot at it, another shot at it, repel it, get that bearish 1OP cross. I'll be shorting. That's all I got for you today. Stay on the short side. CRW should work well for you. See you next week. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.